yes was so easy to credit, I don't think this panel would exist. So yes, Jaya, over to you.
Hi, thank you so much. But anyway, that snippet that you showed was of Kissht was very interesting. Imagine everybody says yes to Sachin, but the maid does not say yes to Sachin. Yeah, so the 500 million borrowers, a very magical number that we've been hearing for so many, for some time now. And the entire Bharat is gearing up to make sure that the dreams of the 500 million borrowers are met. So this session today is quite interesting because I have someone with me who is not only a co-founder of the organization Kisst, but also someone who is, I can say from her profile, is born and brought up in data. So she's been, eating, sleeping, and drinking data. So I'm sure we'll be able to hear some good stuff on how we'll be able to achieve this target. So today's story is about a transformation from a very traditional banking that I had seen way back in 1988 as a banker to today where everything is very digitally enabled and where data actually works to empower lenders and borrowers alike. They're creating a very inclusive economy. Also, where even small businesses and individuals can actually build a financial confidence and then achieve growth. I think the story of innovation, opportunity, and making credit accessible to the India as Bharat is not just about the metropolitan; it's also beyond that. So it's actually bringing there's no more divide between the metropolitan and the urban, the rural, or the semi-urban segment. So when we start with the session, Neha, I think we spoke this about before we kind of got on this stage. What do you think are the key critical elements that we could work towards getting this number, this magical number?
Let us step back a bit, right? Any digital lender, uh, sorry, let us just step back a bit. Every digital lender who exists would be operating in almost 15, 16,000 out of the 20 odd thousand pin codes. But then why does this question keeps popping up, right? Given the way digital lending works, you are predisposed to customers who are digitally savvy, who can give you access to data, who can help you with, the video KYCs and so on and so forth, and who can be intelligent enough to give you right kind of data for you to be able to underwrite. So that is part one. So that in itself, right? While I'm active in 15,000 pin codes, my business might be coming from slightly lesser centers. What would change this probably in next 2 to 3 years? The first part is that with the Gen Z coming up, some of this divide will be covered naturally because anyone who is becoming an adult, financial adult right now, probably is far more technically savvy than probably most of us were. So that is one divide which will be naturally be covered up. Then the next divide is how does one cover for the population, right? I think government has done some fantastic work with account aggregator, but it needs to move beyond the banking data. If I want to go into tier 2, tier 3 and say that, okay, fine, this customer has enough way and means to pay me back. With all the great underwriting data, you still want to ensure the basics are right. So can I access the dairy related data, right? What is the customer income is, crop related data, because beyond, everyone wants to do a regular salaried customer, but once you give this segment enough data in their hands, they will be able to pass it on to you, and then that is when financial inclusion will happen. It can't happen with somebody like me standing on the podium saying that we will expand credit, because credit at the end of the day has to be responsible and has to be unit positive business.
So, a very interesting point that you mentioned is about the Gen Z. We all are, the conversation today is the kind of approach Gen Z has towards various things in life, right? When we talk about credit to the next 500 million borrowers, and we're talking about the, reaching out to the entire, the whole of the Bharat, Gen Z will exist also in the the underbanked and the unserved, right? So, what do you think will change, or what is a behavioral change that you think will make this easier? You mentioned about it something very similar, but can you just put a little more, expand it a little more?
Specific to Gen Z, right? They think of credit as an enabler, right? In our system, we see a lot of Gen Zs borrowing credit for upskilling. It is a very age group specific insight, which we don't see so much in 45 plus, for example. But anyone who is 25 to 30, they 30% of them are taking credit for upskilling. So their approach to borrowing is slightly different. The anecdotes we keep hearing about them that they will just take iPhone on credit, which also is true, but they also see it as an enabler. So the mindset is very different. They are not afraid to take credit if they can service it. So that is point one. Second, that they will of course be technically far more savvy, and they understand that they will have to provide uh, data to the lender for them to be able to extend the credit. So we see far more Gen Zs willing to share their account aggregator data, their alternate data with us, with consent. So that is one place where they're different. And I believe that going forward next 5 years, one should see their interaction with AI to be a little more different. For example, I think the last panelist talked about the reaching the last mile through languages, right?
Yeah.
That is also one of the enablers that would get credit to the last mile.
So yeah, Neha, I think that's a very valid point because right now when we were, I mean, I don't want to sound myself very old, but yeah, when long back when we were doing banking, I remember the shopkeepers or the small business guys who would actually want money. They would come and either have to, give in their gold, or they would borrow money from the lenders. But today's generation and the generation going forward seems to be more and more aligned to working on credit and taking loan without hesitation, because they know that there is a way to they can work towards repayment. They know that they also, I think, more of the one of the things that has come about recently in a recent article that we read was current generation and the generation that's going to come in are quite aligned to the credit history. They understand what is a credit history. They know how they need to keep it right. So I think the divide that we're talking about is something which is narrowing down. And I think it's not a very long wait before we see the entire the country coming under the being able to take good credit.
Unfortunately, there is one particular segment where I don't see much change, which is females. Females taking credit. That proportion, for all the changes that one has seen in the last 7, 8 years, has still remained constant. So I think there is the way I think this gender perceives credit is something that maybe needs an update.
Yeah, I think just to add to that also, Neha, is there are a lot of these organizations which are coming forth in promoting entrepreneurs. So women entrepreneurs are coming in a big way. Okay, so there's a lot of so there's a lot of organizations that are working on it, and I think that's also being, they're also enabling the women to take credit. So I think what you actually called as a point of concern is actually changing quite a bit, and I think that's going to be one of
And
the
I also hope with Gen Z becoming the next set of borrowers, that should automatically change to some
change a
extent.
lot. Yeah,
Fingers crossed to that.
absolutely. Uh, See, while we talk about credit, we talk about the underbanked, the 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 segment that we're talking about. Uh, Earlier, I remember we used to speak about financial literacy. Okay, financial literacy has come a long way at this point of time. How do you think financial literacy going forward should pan for the way the whole credit knowledge should be garnered by the segment across?
So I will break this into two parts, right? The first one is how people engage with money, and the second part is how you protect money, right? About engagement, I think I've seen this change. Students from class 9th, 10th are now being taught about credit, debit, what is a loan, how will the loan work, when you should take a loan, not take a loan. So I think the early education part is extremely useful in terms of teaching kids how to engage with money. Of course, it has to go on in your teenagers and well beyond that, so that the the whole responsible credit is not a lip service. The lender should be as much responsible as the borrower. So when that happens, I think part of the problem will be solved. The second part, I think that is something which requires more thought from regulators, from lenders to borrowers, and God knows what not, is the whole threat of frauds that are coming up.
Mm.
With the advent of AI, the kind of frauds people can commit on unscrupulous people is phenomenal, especially in a certain age group where you hear about digital arrests, you hear about people transferring money. So that is something which I don't know a lot of people have figured out, but that is one area of concern that everyone should have. If I can someone can make a call in my voice to my mother saying that you transfer so much money and she's in trouble, chances are people will transfer, right? How do you go about telling people what is safe, what is not safe? So that is something which is right now quite open, and it requires action roughly from all sides.
Yeah, I fully agree with you, Neha, and I think financial literacy is not about explaining what a payment or what how do you do a UPI. It's about how do you manage your entire credit. How do you manage to ensure what are the various the various organizations or the various government schemes that are available for giving credit. How do you keep a credit score clean and neat? So it's not just about borrowing, it's also about repayment and making sure that there is a cycle that the person has it. So I think financial literacy has gone a long way, but I think we still have a long way to go on that space. But I think one of the things which after talking to a lot of digital lenders, I think one of the things that we should bring on the table when we do a digital lending, especially the fintechs, is the financial literacy, because they're so focused on selling, they're so focused on market, that this segment of financial literacy is completely not taken into account. So I think that should be a very important aspect of every lending organization.
I think I just wanted to bring up an anecdote. I recently saw one of the credit bureaus doing a financial literacy program on how to manage your credit score on a radio,
Yeah.
right? And I think that was a very nice and simple way of telling people how do you keep your a good credit score, because all of us know that make all the payments on time, but maybe doing a few more inquiries is not good for your credit score.
Absolutely.
So
Absolutely.
these nuances taught in a way which people understand goes a long way, rather than something which you learn at the time when you're borrowing. See, RBI has done phenomenal work to bring transparency to the entire digital process. The customer sees exactly what he's getting into and signs up for it, right? So a lot of work has already happened, but at the same time, this is a problem which needs to reach the masses.
Absolutely, I think that's a very valid point, and that's why my conversation with fintechs is not just about business, but also to do financial literacy to the people. Neha, I think we spoke about the Gen Z. We spoke about how do you bring down the divide, and how does financial literacy. In all this put together, what do you think are the big innovations that is required to achieve this target? Some of the big innovations. See, today AI, everybody speaks AI. Okay, everybody speaks. I think everybody's sentences start with AI and end with AI.
And the company names as well.
Yeah, exactly. So, but I don't think that's it, because I think there's a lot of thought that one needs to be put in terms of how do you achieve this. And I know that there's a need for the large innovations that should kind of bring this whole cycle down. So, what do you think are the innovations that you see coming up?
Humor me for some time, because given the business that we are in, we breathe AI/ML, right? We don't have a choice, because that is something that's core to our business, and not just us. I think uh, you have to give credit where it's due. Financial services has been using machine learning in some shape or form for simpler forms since 2005-6. So, and it has evolved over time, and it is one particular industry which is is regulated and still manages to use AI and ML in a very responsible fashion. So please humor me for some time now. On the credit side, we have seen a lot of innovations. How to bring down the credit costs by using state-of-the-art machine learning. Now I see a lot of work going on the collection side. See, for the loop to be complete, I have to be able to lend and then collect as well. So the innovations that I see on collections on the AI side are mammoth. The AI bot calling, it simplifies and makes the collections far more efficient, which in turn means that people will be willing to go to the hinterlands to lend. So that will, for me, will close the loop. Of course, there are many other things on customer service, many other use cases that we have in financial services and lending in specific. But collections plus AI is where the next wave of innovation lies.
I think because you spoke about customer service, and that's something which is very close to my heart also. I think in the and this is not a question to you, but actually I just wanted to kind of share a thought process. There's a need for all of us to ensure that it's not just about sales calling, it's not just about the lending, it's not about collection, it's also about service. How do you serve these customers to the last mile? Use AI to the maximum in terms of humanized calling, which I call it as, because when someone calls on a bot and the moment you hear the call, you just disconnect the call. So the very purpose of your collection, the very purpose of the serve, everything goes down the drain because the guy is just not ready to hear you. So the way AI has to be built in to ensure that the entire mechanism of the customers are ready to listen to you, talk to you, and come to you, and make sure that there's a lovely story that is built around the credit for an organization has to be built in. And this is a suggestion for people who are in the AI space and who are building a lot of solutions, because I think service space is something which is really not picked up in a big way, whereas there's a lot of solutions that is coming up in the AI, in the collections and in the borrowing space. Having said that, I think we've just kind of had this very great conversation with Neha. Any questions from the audience? Happy to answer on both the sides.
I think everyone
Yeah,
needs a coffee.
absolutely. Maybe. Thank you so much. I think we kind of thank everyone for having a ear to our conversations. And thank you, Neha, for the interesting session that we had on this subject.
Really catching up with you.